Inflation has fallen in September, in the months of September, to 1.7%.
Let's just rejoice at that news.
Well, indeed. It's down
somebody famous once said.
It's down from 2.2%, so significant fall. And it's below the Bank of England's target rate of 2% for the first time since April 2021. We think of the big inflation spike up to more than 11% has been driven by the war in Ukraine, but inflation started marching up after COVID restrictions eased, supply chains made things more expensive. So it's good news for consumers. It's good news for the Governor of the Bank of England. I'm not able...
know about underlying inflation, don't
Indeed,
we,
I'm not able to get into the Office for National Statistics underlying analysis here, so I haven't got that number. I'll just double-check. Yes, we have core inflation, which is exactly the other number the bank will be looking at, and that's often has been recently driven by services inflation, so that's the inflation that's got stuck since things like fuel prices have declined. That's still at 3.2%, but that's another decline, if I've got that right. So ahead of the Bank of England's decision next month, which was already the markets put at an 80% chance of an interest rate cut, I would anticipate that number is only going to increase, and it's looking almost, it's going to look close to nailed on that interest rates will come down at the next meeting, which is doubly good news for consumers. And there's good news in there for the Chancellor as well, as she's pondering a budget. One of the numbers that's been really troubling has been the amount of debt interest the government's had to pay as rates fall.
That's due to go up again, isn't it? Because
by the end of the, it should be said, the bank's forecast and most independent forecasts at this rate will increase again as the year goes on, but we will be within the vicinity of the 2% mark. And being under the, should we say, for the economists, being under the 2% mark by 0.3% shouldn't really be much different to being over it by 0.3%. They want to be in the region of that target because having it too low isn't good either. But this is larger than was expected, driven by fuel prices primarily. They don't just affect us at the pump, they affect transport costs, they feed through the entire economy. So it's good news, and it's more than the economists were expecting.
And when you were talking about underlying rate, that's still up at just over 3%. What about food prices and the like? Food
prices have started to fall.
Not go up as quickly?
Well, they've actually started to fall. There's deflation in some food prices.
Oh, excellent. Tell us more.
Well, over the last couple of months, we've just seen a retreat in those astronomically high impacts. Again, much of it comes back to Ukraine. Cereal prices, which feed into the price of oils as well as cereals, they've started to back off. So yeah, this number today, 1.7% in the headline rate of inflation. Prices are still rising, just by not as much, but there's been some deflation in food. It doesn't feel like it, does it? When we had a shot, when, you know, it doesn't, but there has been a bit of a backing off. So some of those, you know, the frontline effects of inflation, food, fuels, the volatile commodities have started to recede and back off. What the Bank of England has been worried about, and that core inflation number, is the inflationary costs that have got stuck in the economy, particularly through wage growth. Now, wages, we had numbers yesterday on wage inflation just below 5%. So wage inflation is falling. So employers are facing not quite as much pressure to keep wages high. And, of course, that means they're rising in real terms against this inflation number because they are bigger. Of course, employers are all sitting there wondering, in 2 weeks today, I think it is 2 weeks today, they'll be finding out whether the cost of employing people is going to get higher again because the Chancellor wants to put up national insurance.